Up on this edition of FreightWaves Now. Monday edition of FreightWaves Now. I'm Anthony Smith here with Tony Mulvey. This is the Tony edition this morning, and we have quite the show lined up for you.
Yeah, coming up, we'll talk to Mike Baudendistel about the latest Wal-Mart earnings call in our community segment. We'll also preview our Sirius XM radio show with Grace Sharkey and talk to Alan Adler about Nikola's financial position. But first, our top story takes us to the U.S.-Mexico border, where nearshoring activities have created a booming economy for warehousing and distribution center. Our Noi Mahoney is here to talk about it. Noi, how's it going?
Good. Thank you for having me.
Awesome. So we've really seen this kind of boom at the border and across the border there in Mexico around nearshoring. Just kind of touch on what's going on in Mexico around this nearshoring, reshoring trend.
Well, as you mentioned, nearshoring is creating big changes in the global supply chain by boosting demand for industrial space, such as logistics centers and warehouses all along the U.S.-Mexico border. We're seeing more foreign companies and even a few American companies shifting their production and manufacturing hubs to Mexico with the aim of being closer to their end customers, which are mostly in the U.S.
Yeah, everything, that's a trend that we've seen a lot recently is that nearshoring has obviously been talked about. But when we say we're talking about the border, is everything at the border? Is it spreading out across all of Mexico and then moving further north? What's the trends there? Are we seeing it really happen, I guess, in that close to the border area?
Well, the biggest boom, the biggest demand seems to be most of the border towns, stretching from the U.S.-Mexico border in California all the way, to Texas. But as you mentioned, there's also demand for industrial space, warehouses, logistics centers, sort of starting from central Mexico on up to the border regions. But the biggest demand seems to be right along the border towns, along the U.S.-Mexico border.
And knowing when we're looking at the industry, is there anything in particular that we're seeing being impacted by nearshoring? Anything like automotive, for example, or we're looking at apparel manufacturing?
I spoke to one of the companies that just signed a big lease for space along the border was R.L. Jones Custom House Brokers. They signed a lease for industrial space at a new industrial park called the Landmark at Otay. And I asked them specifically what you just mentioned, what are you seeing, what kind of stuff is moving across the border? And they did say automotive is a big one. They said e-commerce fulfillment is also getting bigger and bigger for cross-border towns, which I thought was interesting. And what they specifically mentioned to me was they ship a lot of raw materials south, and then the raw materials are made into whatever goods or products, they're sent to in Mexico. And then those finished products are shipped back to the U.S. for, retail or whatever, automotive factories. So we're seeing a lot of raw material go south and finished products come back north.
That's interesting. I think that's one of the trends. Obviously, we've talked about it a bunch. But, you start looking at things like this. What does that mean for the real estate industry there? It seems like this nearshoring trend is obviously going to put increased demand on real estate in that cross-border, right at the border of Mexico. One, is there enough supply to meet that demand? And what does it mean in the long run for that real estate market?
I think right now, they can't build buildings fast enough, I guess is one way to put it. As soon as, that R.L. Jones Custom House Brokers, they signed a pre-lease, so the building that they want to move into hasn't been completed yet. It'll be done in May. So we're seeing a lot of, leases get snapped up before the buildings are even finished. So there is definitely, red hot demand. One of the other components to this is there enough labor along the border, for these logistics centers and, warehouses. And right now it seems to be the case that there is enough of workforce along these border towns to, to be able to fill jobs at these logistics centers and warehouses. But those are two big components going forward in the future. We're going to see how, if they can keep up, keep building enough facilities for all the demand, and if there's enough workforce to be able to fill these jobs that are needed to do to get it done.
And Noi, looking at the current boom happening right now, will we potentially start to see some maybe U.S. companies start to send their folks down to Mexico and maybe see more of a larger U.S. population there?
That's an interesting question. I did talk to some cross-border operators about, will we start to see more American companies or shippers send more of their U.S. workforce to Mexico? And one of the people told me, if it happens, they're just going to probably send them to border towns where, say a manufacturing plant manager, who's American, will work at a factory just across the border from, say, like McAllen, Texas. He'll be working at a factory in Reynosa, and then he'll live in McAllen. And he said the reason for that is a lot of American families, they have kids in school, so they probably want them to go to American schools. And so if we do see, Americans working, at, production facilities in Mexico, it'll probably be borderland areas where they can still, live in the United States, but drive across the border every day and work at that factory in Mexico.
That makes complete sense to me. We're going to kind of shift gears, but it's really not even shifting gears. It's kind of staying in the same gear. I mean, we saw ZF Group announce a $250 million expansion into Mexico. I mean, it's a German auto company. Why would they be focused on expanding in Mexico? Is that strategic? Is it just trying to take advantage of, again, like a nearshoring, reshoring trend here, to get more, I guess, an advantageous location to the U.S.?
I think it's a little bit of both things you just mentioned. ZF Group, which is I believe it's the world's largest automotive parts supplier. They've been in Mexico for a while already. They have a large presence in the Mexican city of Querétaro, which is central Mexico. And so this $250 million investment, they're expanding 2 existing factories, as well as building a new distribution center in that same city, Querétaro. And they're expanding their production of braking control systems and electrical systems that go into automobiles. And a lot of their customers are North American auto manufacturers. So they're really just boosting their presence and distribution capabilities, in North America. And part of it is, as you mentioned, increased nearshoring, and just, solidifying their market share here in the Americas.
Of course, we're hearing from Germany, but really the U.S. would have a lot of countries that would love to kind of get a little bit closer. Of course, when we're looking at Asia, Japan is definitely one of those countries potentially. Do we see any investment coming from Japan at all?
Not quite as much as I would have expected. We're seeing a lot from China, interestingly. China's been one of the big nearshoring investors, which is very interesting because you would think that, they would fight to keep, their factories and production in in China. But a lot of these Chinese manufacturers are putting production hubs and manufacturing hubs in Mexico as well to take advantage of this nearshoring change in the global supply chain.
And Noi, last question here. Can you tell us a little about what's going on with Ascend and Volvo?
That's very interesting. Ascend became a partner with Volvo. Let's see, I got it written down here. Volvo's autonomous systems. It's a new hub-to-hub autonomous lane that Volvo has, and it's a hub from Dallas to Houston. And so Ascend is part of this new network, or this new lane, where Ascend will, I believe, ship their products to one of the hubs, such as Dallas or Houston, and from that hub, the Volvo will use their autonomous trucks to move the freight to the another autonomous hub, which is either in Dallas or Houston, and from there, Ascend will pick up that shipment and move it to its end destination. So this autonomous lane is really for the middle mile, for, I'm going to guess, maybe a lot of e-commerce fulfillment or stuff like that. But it's really interesting because we're seeing more and more autonomous trucks on the roads here in Texas.
Interesting indeed, and definitely something that we're going to have to watch closely. Noi, thanks so much for joining us this morning, and we'll be sure to follow up as this nearshoring effort continues.
Thank you so much.
Thank you. Right now, we're going to head over to the wall because we have our first carrier update of the morning.
Welcome into this carrier update. I'm Tony Mulvey, joined by Donnie Gilbert. Donnie, get us started here. It's Monday morning. What better way to start out by looking what's going on in the reefer market? Seen some positive things here to close out the month.
Yeah, so here, just as the last few days here, 20th, 22nd, 24th, you see a little trend here. Not significant, but at least it's headed upward and not downward. So, rebound here, 40, 50 basis points, back up to 1361. Of course, tomorrow is the official last day of the month, so people are going to be trying to get items off their dock, at least onto the trailers, moving, quote, moving, so they can close it out and take that revenue for it this month. And so right now, whether it's reefer, drive-in, whatever you're moving, you need to start pushing those rates up if you're running some spot market stuff, only because they'll pay a little bit more right now. Now's your chance. Today, tomorrow, and then Wednesday, it'll all be over.
Yeah, especially when you look at a rejection rate here. I mean, right, we're seeing it stable at right around 4%, which is really historic lows. You really haven't seen a reaction on that side to the end of the month. And that, so demand is reacting, capacity is not to the end of the month, but
there are, rejection rates are a lot of times based on capacity, but now it's got that little diesel fuel hovering over it as well. Now, diesel fuel is getting a lot better. We'll look at it here in our third session. But, here in Chattanooga, I bought diesel fuel over the weekend at $3.60 at a truck stop. So it's headed in the right direction. There's a lot of relief that'll really help out. And as these spot rates drop and diesel fuel drops, that'll help them a little bit. It's not enough, but it will help them just a little bit.
Yep.
So yeah, rejection rates right below 4%, right above 4%. Been pretty steady, right around that 4% mark, as you said. It's going to be tough to get any lower. We'll see if they can get any lower. And like I say, these are historic lows.
Yeah, I mean, really, March will be the time to pay attention to it, because if you think about the back half of March, you'll start to see produce start to move. And the thing with produce is what goes on, especially if it's on the reefer side, it's a lot more kind of that direct to spot movement, shorter lead times, things like that. So eventually, we may not see it show up in volumes necessarily, but we may see rejection rates react, indicating that, hey, something's going on in the produce market just because capacity's not there, right? It's tightening up.
Let's go to the next chart here and see what the changes are. And this is where you're going to want to watch for that reaction, Tony, is especially in areas like Houston, Dallas, where we got things that are produce that's coming across from Mexico. They'll cross at Laredo. They'll go to a lot of distribution centers that are in Dallas or Fort Worth or even Houston, where they'll be brought into a warehouse, redistributed, reloaded, sent back out again.
Yep.
And we'll see, this is the first area that we see a little produce starting to cross. You may see some coming out of the tip of Florida, where imports are coming into Miami from South America, and those imports may, but I don't, normally we don't really see this tighten up till we get the watermelons and other types of melons coming in that are actually grown in Florida. But this will be a big map that you need to start watching here as we get on into March and to see what markets are changing. Now, from last week to this week, or 2 weeks ago, we saw a lot of red in here.
Yep.
Well, this is starting to rebound a little bit, but as this picks up, you have others that are dropping. Here, Columbus, Ohio is a big one, and it's kind of keeping that balance out. But yet, markets are changing, and that's what's important. And people got to understand, just because it's staying around 4% doesn't mean that just nothing's happening.
Yeah.
You got to find out where these markets are changing, and those are the markets that you're going to want to see in your trucks too.
Yeah, because if you're operating in some of the, like a market and you just see rejection rates are 4%, and they really haven't changed week over week, but say you're operating in Cedar Rapids, Iowa, right? Now we see rejections are rising. Well, rates are probably going up in that market, but if you just see that 4%, you're missing out.
You just missed an opportunity,
Yep.
and right now is not a time that we can be missing opportunities.
Yeah.
Let's go to the next chart here right quick. Just look at one of these, like you just said, we're going to bring up Joliet, Illinois. It was a big change, or small change. Rejection rates have come up 0.29%. Since last week, so we see a little bit of a rise in rejection rates here, headed in the right direction. It's still very low at 2.48%, but it has a lot of volume. This is one of the biggest volumes right now, probably because it's warehoused there right now for reefer right now. So keep an eye on this market, and we'll look at some of these in the lanes of the day.
Absolutely. Well, Donnie, thank you so much for this update. We'll be sure to check in with you again a little later. Right now, we'll hand it over to Bill Priestley.
Sydney has
I'm on. Let's go to it.
Transportation Safety Board about the February 3rd derailment of a Norfolk Southern train near East Palestine, Ohio. There appears to be differences over what the next steps should be, particularly as it pertains to the pace of potential reforms. Some entities called for unimpeded investigations, while others said manufacturers should be ready to respond to recommendations and that railroads must quickly boost safety. The report came out last Thursday with recommendations to quickly adopt changes in practice as the investigation unfurls. Packer Incorporated is recalling 6 models of Kenworth and Peterbilt medium-duty trucks over 4 model years for possible sudden brake failure that could lead to a crash. Certain 2021 to 2024 Kenworth and Peterbilt vehicles make up the list of trucks recalled. The pedal plunger connecting the brake pedal to the brake valve may disconnect when the brake pedal is fully applied and then released rapidly. Brake failure could result. The pedal plunger that connects the brake pedal to the brake valve may also become disconnected, causing brake failure. The recall began with a Bendix commercial vehicle system recall of 10,425 brake parts. Bendix sold those only to Kenworth, according to its recall filing. CM Logistics is offering employees $2,000 to quit the company, avoiding the cost of layoffs, even as it continues to hire new workers for the U.S. network. The Chattanooga-based Tennessee 3PL said that it has offered cash for quits programs periodically for several years, but it usually attracts few takers. Employees received the latest offer via an email this week. Quote, "It's simply an offer to anyone in the company, and it's meant to help people move on if their heart is not in it for the long term at Steam," President Steve Cox told FreightWave in an email on Saturday. Paying employees to quit differs from an employee buyout because structured plans typically pay and benefits for a defined period of time. Layoffs can often be more expensive. And for those headlines and more, log on to FreightWaves.com. If you're watching on YouTube, don't forget to like and subscribe. And for all the FreightWaves experience, get it on FreightWaves app or log on to tv.freightwaves.com. We'll take a short break. We'll be back right after this.
Do you want to watch the weirdest show in freight? Catch your nooner with Dooner right here on FreightWaves TV live every Monday, Wednesday, and Friday at noon Eastern Time, or on video on demand and podcast players whenever you guys scratch that itch.
From the truckload quoting page within Thai TMS, you can create a new shipment to instantly display your historical lane average alongside all of the market-leading rating intelligence tools. In just a few clicks, you can adjust the quote, add your margin, select your quote response template, and email an official quote right off to the customer from the same page. Request a demo today at thai-software.com to find out how Thai TMS can optimize your quoting process.
Welcome to Drilling Deep. I'm your host, John Kingston. Drilling Deep is the place where we talk about oil and we talk about diesel, and you have to drill to get oil and you have to get oil to make diesel, so that's why we call it Drilling Deep. Drilling Deep drops every Friday on FreightWaves TV and all available podcast platforms.
Welcome back to FreightWaves Now, everybody. I'm Isaiah Buchanan, and this is Social Roundabout, where we take a look at what's trending on social media. So this first video that I have is actually about a week old. It comes from the Wyoming Highway Patrol, but it was posted on our account, Back the Truck Up, which is posted by Super Trucker. Make sure you follow that account because it's got a lot of great content related to truckers. But the video got 3.5 million views and over 80,000 likes. Take a look at it. The Wyoming Highway Patrol did ask drivers to slow down and give space to those emergency vehicles that are on the side of the road, because that was a very close call. If he didn't look up right there when he did, that probably could have been really, really bad. Now, second thing I want to talk about is something that's very near and dear to my heart. Today is February 27th, but it's also known as Pokemon Day. And Pokemon has this video out that talks about Pokemon Day. They're actually doing their reveal right now. This is the video that they posted on all of their social media sites, getting ready to celebrate 2023's Pokemon Day. So they're going to be announcing something new today, whether it's a new game for the Nintendo Switch, or maybe something new with Pokemon Go on their app. Just really excited to see what they're gonna have coming out here in a couple of hours, minutes to hours really, because like I said, they're doing the reveal for this right now. You can see that it says that they're presenting starting at 6 a.m. So it's 9 a.m. our time, so they've already gotten started. So excited to see what they have coming out here soon. And last but not least, if I had to see this, then you guys do too. There is this new Chinese kissing device. Yes, this is what it looks like right here. Basically, you put this onto your phone, and it has pressure sensors on it, and you can see it's a silicone mold of lips. It lets you transmit a kiss to your partner. Now, they have to have the mobile app, and you have to be on the same wavelength for that app, and it can transmit the kiss from one person's phone to the other. And it also can transmit sound as well. So there's a lot going on with that, but it's retailing for about $41 US if that's something that you and your partner who are doing long distance are interested in. That's all I got for this edition of Social Roundabout. Anthony, Tony, what are you guys thinking about the Chinese kissing device?
Definitely something that I think Soulja Boy can get on board with Gets You to the Phone. He was a few years early.
Hey, he was a few years early. I mean, I don't know if that's what he meant, but, now it's a reality.
He's always early to the party. Well, Isaiah, thanks so much for that social roundabout. Definitely some interesting stories, and we're going to continue the interesting stories next with Alan Adler, where we talk about what's going on with Nikola. Alan, thanks so much for joining us this morning.
Just my take on the last segment is the emoji works just fine. Okay, I'm good with you. I'm good with the emoji.
I'm with you. I don't think I'll be investing in this, so I'm with you. I think the emoji does the job.
Yeah.
And they missed it. They missed it by 2 weeks. It's a Valentine's Day thing, right? Anyway, all right. So, guys, we always talk about Nikola. We have to keep talking about Nikola because I keep writing about it. But really, what's going on now is they took a little umbrage, quite honestly. We didn't have to make a change or anything. They took umbrage to the idea that they might run out of money in 12 months. And they might, or they might not. But so on Saturday, I did an interview with Kim Brady, who's the chief financial officer at Nikola. And Kim wanted to make sure that I understood that they see their liquidity position, that is how much access they have to the capital markets as well as cash, as being about the same as it was at the end of 2021. The numbers do line up in a certain way. However, the company has less cash in that number. They've got about $943 million of total liquidity at the end of 2022. Of that, about $323 million is in cash. The rest is opportunity to sell equity, that is, to sell shares into the market. And they've got like 3 devices to do that. The interesting thing, and the thing that I think is causing them some angst, is that their auditors told them you can't count these other things besides your cash in terms of having sure access to it this year. The stock is a little over $2 a share. A number of analysts have downgraded the stock in terms of its price and that kind of thing. And all of this is juxtaposed by what looks like a growing business. And I think it is a growing business. They're adding partnerships, both in terms of making hydrogen and also, autonomy, a number of things. They just continue to make news with new partnerships. But their financial condition is difficult, I guess is the best way to put it. And so when we wrote about the 10K, that's the filing that they have to do at the end of the year, saying that they had a notice of going concern, that seemed like a pretty big deal. And it is a pretty big deal. But Nikola would argue that that's just accounting language, and that's really not something that's affecting their day-to-day business. They do expect to cut expenses about 25% this year. They've got the plant in Arizona up for sale so they can lease it back, raise some cash that way. They've already done that with their headquarters in Phoenix. So, I mean, they're doing everything they can to keep things moving. There's a gap, though, between where we are today and where they ultimately could get to if everything works right. So, we just continue to keep an eye on the company and report what we see. And of course, when they're willing to talk about it as they were on Saturday, then we want to report that too.
Yeah, I mean, when you start looking at companies, I mean, in this situation especially, right? I mean, you're dealing with, it feels like they've been in the news for almost all the wrong reasons, right? I mean, between their founder, Trevor Milton, there on trial. I mean, how much does that play a factor into, like, say, a public market, just like the perception? Because, like you said, their auditors came back and said, hey, you can't count this as liquidity because you have to have ultimately you have to have a buyer of if you have to go into the public market. So, like, does that, I mean, even though they're basically disassociated with them, like, does that play an impact there when they're trying to raise capital?
Tony, I think we can pretty much put Trevor Milton in the rearview mirror for Nikola. I really do. I think, we have his sentencing coming up, for fraud charges in June, and that will, cast a bit of a shadow on Nikola. But I think they moved beyond Trevor for the most part. He fought them, interestingly enough, in trying to authorize more shares so that they could have these commitments. And these are committed facilities, if you will, that they can actually go into. But the problem is that when you go in and you use a lot of shares to raise money at $2 a share or $2.20 a share as they closed on Friday, it's going to be very, very expensive. It does cause dilution to current shareholders. And so, that is sending a signal to the market that, well, maybe we don't really want to do this right now. We don't see them necessarily failing, but we don't see them in healthy financial shape. And that is not really entirely their fault. They're not doing anything wrong. Now, they did purchase their battery supplier last year. Financially, that's a bit of a setback because Romeo Power was basically discounting the stuff they were selling Nikola. Nikola saw that and now has to make up about $110,000 for every battery pack that they make, having acquired Romeo, because that discount was, not really real, I suppose. And so they're working to, bring down cost and localize. We had Michael Loscheller, the CEO of Nikola, on Global Supply Chain Week last week, and he was explaining that bringing things in-house and vertically integrating, and as they're doing with both fuel cell modules for the truck packs, which are on the road now,